Ladies and gentlemen, welcome back to the channel. What a day today. Stocks started off really strong. This was like an everything rally, and then you faded. Now, the small cap AI area is doing the best. A lot of stocks we own are up 5 to 10% today, even following some of this carnage. But in today's episode, we're going to discuss what happened, why the sharp reversal, and what is coming next. Let me just tell you, when stocks sell off on good news, it is a buying opportunity. And that is what today is. Now, in essence, the odds of a rate cut are falling because of better than expected economic data, better than expected earnings and commentary from Walmart. NVIDIA earnings obviously adds to that in some degree as well, with NVIDIA reaffirming that AI is not a bubble, that AI demand is strong. And you had the BLS today that delayed the GDP report and the personal spending report that was supposed to come out on November 26th. So now Wall Street's like, okay, we're not going to have much for economic data between now and the next Fed meeting. And some Wall Street banks are changing their expectations for Fed rate cuts. But the fact of the matter is, the only thing that really matters is that the economy is not going into a recession. Okay? So I think this is a bottoming event. I think this was a capitulation event and a sell the news event, if you will, which there's a lot of signs of today actually marking a bottom for this market. Even Citadel says they expect the S&P to have a year-end rally and hit 7,000, which would be about 6.5% upside in the next 5 weeks or so. So the work is cut out for us here in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. If you guys want to come join the trading community, check that link out down below in the description of today's episode. What we're doing is going out to find the next big winners in AI. We want to be early to high quality, hyper growth AI stocks with large total addressable markets that they are disrupting. Simple as that. Once you find stocks like that, you got to seize that opportunity. And that is what we are doing. That link is down below. Come join us. But with that said, let's get started. Ladies and gentlemen, today, weird ass day. Okay, we're going to break it down, put it into context, give you everything you need to know. Okay, and again, it's kind of a two-folded kind of thing. First off, better than expected economic data across the board. Number one, the BLS delayed the data that we were going to get next week. They delayed the GDP report and the personal spending, personal income report that was already delayed until December 16th. So that data we were expecting on November 26th, yeah, we're no longer going to get that before the Fed meeting. So basically, we're not going to get a rate cut December 10th. That's what the markets are dealing with today. Now, the flip side of that is, that means the economy's better than expected, right? That's a good thing. Now, we have heard from some Fed officials today that acknowledge the jobs report was a bit mixed. Fed Hammock says that she has an open mind heading into December. But still, the probabilities for a Fed rate cut only sit at 35%, or 33% now. And the problem is, we're not really going to get any other economic data that's going to move the needle that could change these odds. Unless the Fed just flip-flops and some of the hawkish members start to vouch for a rate cut, it's going to be a very close Fed meeting. Like, this is going to be the closest Fed meeting, the most divided Fed meeting we have ever seen from the Fed before. It's actually pretty rare to get dissents at all for the Fed not to be in unanimous agreement for their Fed policy. But this time, you're going to have at least a couple of Fed officials that want to cut rates and a couple that don't. Now, before we get too far into that and what's happening specifically in markets today, let me give you a rundown of the overall better than expected economic data today. Non-farm payrolls for September came in at 119,000. The expectation was 50,000. I said this yesterday. I said specifically, anything higher than 50,000 is going to be seen as negative. Okay? You got 119,000. Now, last month for August, we had 22,000 job ads. That was revised to negative 4,000. So that's where this is a little mixed because August was negative. And then you're really positive for September. The unemployment rate was expected to hold steady at 4.3%. It went up to 4.4%. So it's not like it was super strong across the board. There were some negative factors to this jobs report. Average hourly earnings month over month came in lower at 0.2%. Average hourly earnings year over year came in at 3.8%, around in line with expectations. Now, initial jobless claims. This is more of a up-to-date indicator on how the labor market is doing. All of them came in better than expected. Okay, we got the whole round of them today. So for October 4th, came in at 235,000, coming in a little bit higher than the expected 227,000. But October 11th came in at 220,000 versus expectations of 249,000. October 25th came in at 220,000 versus expectations of 257,000. November 1st came in at 229,000 versus expectations of 259,000. November 8th came in at 228,000 versus expectations of 260,000. And November 15th came in at 220,000 versus expectations of 262,000. So even though we don't have the jobs report for October and November, based on these initial jobless claims, Wall Street is saying it's probably not super bad, or it's not going to be as bad as feared. Mix that with the better than expected September headline jobs number and the delaying of the data that was supposed to come out next week on Wednesday, November 26th, and Wall Street saying, yeah, we're not going to get a rate cut. Some of your major banks, like Morgan Stanley, are now saying we're not going to get a rate cut December 10th. Others, like Wells Fargo, say it's going to be close, and they think the Fed should cut rates, and they're not going to change their call. So that, in essence, is what is happening today. Now, that's not a bad thing. This market can do quite well without rate cuts. But the digestion of the reality that we're not going to get a rate cut in the very short term is negative. That's why I said yesterday, a too strong of a jobs report is negative for markets. Now, it's not negative for months. It's negative for a day or two, right? Let the markets come to an understanding that we're not going to be getting a rate cut December 10th. Okay? Now, maybe we do. Maybe Fed officials come out and support a cut. Like, that's the only thing at this point that, that's going to move the odds of a rate cut, is if Fed officials come out and support a cut. And Wall Street saying that, yeah, that's probably not going to happen. Now, even if you look at other smaller data sets like Philly Fed business conditions, came in at 49.6 versus last month at 36.2. Better than expected. CapEx, 26.7 versus 25.2. Better than expected. Employment at 6.0 versus 4.6. Better than expected. New orders came in at negative 8.6 versus last month at 18.2. That was worse than expected. But prices paid came in higher at 56.1 versus 49.2. So inflationary component of the Philly Fed data today came in stronger. Now the U6 unemployment rate, which is individuals that are working part-time that want to work full-time but cannot find full-time employment, went lower from 8.1% down to 8%. So literally across the board, even real estate, existing home sales came in at 4.1 million versus 4.08 million. Existing home sales month over month came in at positive 1.2% versus expectations of 0.9%. Literally, even real estate had a better than expected economic data today. The Kansas Fed Composite Index came in at 8 versus expectations of 4. Kansas Fed Manufacturing Index came in at 18 versus expectations of 12. Now, again, keep in mind, in the very short term, day or two following the realization we're not going to get a rate cut, can be negative. But this is not a market crash event. Not getting a rate cut. Are you serious? Okay. But the knee-jerk reaction is, not going to be pleasant, as we talked about yesterday. And we're seeing the reality of that situation. But here's the deal. AI is alive and well. Jensen Huang confirmed. Although we knew what he was going to say ahead of time, Wall Street just has short-term memory loss. Walmart had very strong things to say, very positive things to say about the holiday shopping season. Okay, Walmart, let me pull this up for you. Walmart hikes their sales and earnings forecast as they attract shoppers across incomes. Okay, Walmart said they saw some temporary slowness when the SNAP benefits were paused during the government shutdown. But they say that things are largely unchanged. In an interview with CNBC, Chief Financial Officer John David Rainey said consumer habits didn't change during the quarter as shoppers spent selectively and looked for deals. He said Walmart has gained those value-seeking customers across incomes, both because of the economic backdrop and its own strategic moves. He said consumer habits didn't change during the quarter. That's a good thing. Okay? He says consumers are looking to do business with those companies that are providing value and are delivering the convenience that they have come to know and expect and are executing consistently well. Okay? It's as simple as this. This is a good thing. Okay? Put it into two buckets, right? Would you rather have a recessionary economy that the Fed needs to cut rates to support? Or would you rather have a strong economy the Fed does not need to, cut rates to support? What scenario do you think the markets are going to do better in? They're going to do better in the stronger economy. 80% of company earnings are derived from the economy. So Walmart says they're optimistic. Literally, they say they're optimistic about the holiday shopping season. Rainey said Walmart is, quote, going into the holiday pretty optimistic, saying it's prepared with competitive price points. Walmart in 2007 was the company that came out and cut guidance and warned about the consumer and blah, blah, blah. Walmart did exactly what we expected. They said that things are unchanged. They're not noticing any changes. That means the economy is likely relatively unchanged. The consumer is continuing to spend. Okay? That is a good thing. Now, this market kind of fizzled out from the highs in the beginning of the trading day today. But give it a day or two. This is digestion. Okay? This is the realization that we're probably not going to get a cut December 10th. But it is a lot better than the other scenario, which would be Walmart slashing guidance, recession warnings, negative 100,000 jobs report, right? You want the economy to be strong, always, every single time, no matter what market you're in. If the markets sell off on a stronger than expected economy, like today, that is a buying opportunity because that's not going to last. The last thing you want is a recession for your portfolio. Unless you're really young, I wouldn't mind a recession. I wouldn't mind to have some years to buy the dip. But that's not what most people want. Okay? Now, again, people are panicky, they're fidgety, they're jumpy right now. But this sets up a year-end rally on AI that is alive and well and a economy that is apparently alive and well. Whether or not we get Fed rate cuts, that is to be determined. We will see what Fed speakers say because the jobs report in all reality was mixed, depending on what you're looking at. The August numbers revised down, 26,000 to negative? Not great. Unemployment rate went up. Not great. Okay? It wasn't all super great, but again, I think it's the delay of the economic data coming next week that Wall Street's saying, okay, yep, we're not going to get a rate cut. And that's what has Wall Street, a little jumpy today. Now, I'll tell you, when you look at the sentiment of this market, it is terrible, okay? CNN Fear and Greed Index is at 9, okay? It's at 9. Outside of like major crashes, I can't recall ever seeing this. Now it's at 8, okay? Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Now market volatility has turned to extreme fear as well. Safe haven demand, extreme fear. Junk bond demand in extreme fear also. I mean, let's take a look at the indexes right now. S&P down 0.76%. NASDAQ down 1%. Russell just went negative. The VIX up 15%. Are we serious right now? This is laughable, okay? These are not sell-offs that will last, right? The markets can do very well without rate cuts, as long as the economy is doing well. And that's what Wall Street is going to realize over the coming days. Tomorrow, Wall Street's going to realize that. Like, why did I freak out over not getting a rate cut? Like, economy's good, right? That's not the reason to start freaking out. And again, historically, when sentiment is this terrible, you've always made money when you've bought. So I look at it as a buying opportunity, but really, I like to look at things structurally, like what changed, right? How long would a downturn be if XYZ happened, right? Recession is the big problem. The big risk today was really bad economic data, really bad, warning from Walmart. That's what takes a 1 to 2 day kind of reset on no rate cut, fears, to multi-month, multi-year prolonged downturn. That's not, again, what most people want. Now, I wouldn't mind, but most people don't want that. Now, the AI Investor Sentiment Survey today showed bullish investors rose from 31.6% last week to 32.6% this week. So a little bit of a move higher, a 1% move higher. Neutral investors rose from 19.2% to 23.9%, so quite a move higher there. And bearish investors fell from 49.1% to 43.6%. But following today, you're going to see those bearish investors rising again. Now, the percent of stocks trading above their 50-day moving average coming in at 35.5%. So, just really bad, right? This market is really, really scared for no good reason, right? Again, AI is alive and well. Economy is alive and well. People act like a 25 basis point rate cut really does anything, like it's going to move the needle for this economy. It doesn't. This is algorithms, knee-jerk reactions. You don't want to make a big change in your portfolio on good news, right? You don't want to sell your portfolio on good news. That never ends well for you. Again, I'm not a financial advisor. I'm not a financial planner. Do what you guys want to do in your portfolio, but I solidly view this as a buying opportunity. There's no other way to put it. Now, in your headline news today, Citadel's Rubner sees the S&P 500 rallying to 7,000. Citadel's Scott Rubner says the recent S&P 500 pullback sets the stage for a year-end rally to 7,000, up 5.4%, driven by strong retail demand, light institutional positioning, Nvidia momentum, and supportive seasonality. He expects continued retail buying, easing systemic outflows, and a broader sector rotation. Morgan Stanley no longer expects the U.S. Fed to cut interest rates in December after the jobs data. She says not all market volatility is problematic. She says, basically stocks fall. Bitcoin also kind of was a leader to the downside today, for not a great, I don't have a great understanding of why this is happening. It's not as easy as stocks, because it didn't really go up alongside the markets. Currently Bitcoin at about 87,000, and that just likely has to do with rate cut odds. being further solidified that we're not going to get a cut December 10th. But for those of you guys that love crypto, this is presenting a pretty nice opportunity. Now, in a little bit of good news today, Ukraine's President Zelensky says, I agreed to work on the U.S. draft plan to end the war. I am ready to work with the U.S. and Europe for peace. Here you can see the BLS says the employment situation for November 2025 to be released on December 16th. And they also delayed the other data that we were supposed to get. There's a headline somewhere on that. Here it says U.S. Commerce Department says the U.S. GDP and personal income reports originally set for November 26th release will be rescheduled. Now, Wells Fargo says the Fed should cut in December. Wells Fargo's Sarah House says the Fed should cut rates by 25 basis points in December, citing easing inflation and growing labor market slack. She notes hawks may argue against a cut due to above-target inflation and solid job growth, but the bank is still sticking with its call while acknowledging it's a close decision. Fed Hammock says today, in housing, input costs are a real issue. She says, I had been anticipating a cooling in jobs, and the data is confirming that. She says we need to keep monetary policy somewhat restrictive due to inflation, and she says the Fed has to balance both sides of the mandate. She says that she goes into all Fed meetings with an open mind. So that's, again, not saying she would not support a cut, right? So I think the markets just are getting a little too jumpy for one, assuming we're not going to get a cut December 10th. But also, again, it really doesn't matter in the grand scheme of things. Fed Hammock says the jobs report is a bit stale, but is in line with expectations. Fed Hammock says the job data looked a bit mixed, and she says jobs data highlighted challenges faced by monetary policy. JD Vance says today it's going to take some time to feel the economic boom in the U.S. And he says the shutdown is going to cause some damage, but he thinks it will be minor. Fed Barr says we need to be careful with monetary policy to balance risks, and he says we need to support the labor market but return inflation to 2%. Here, when we look at the broader indexes, now the Dow is down 0.81%, S&P is down 1.1%, NASDAQ down 1.5%, Russell down 0.54%, and the VIX is up almost 18% today to 27.84. This, to me, looks like the final flush out, okay? This looks like the bottoming moment. This looks like the capitulation to me. We just had good earnings from Walmart, from Nvidia, better than expected economic data. All of that is good, but it does look like there's a bit of a flush out happening in markets right now. That, Wall Street's getting the last bit of panic out the way, and as Citadel said, then we set up for a year-end rally. Okay? Look at Bitcoin, $86,500. That's what I see from here. I do see a year-end rally coming. All of the pieces to the puzzle are in place. You're just seeing, digestion, right? That's all this is. And normally, like, even look at the VIX here. Like, once you get to these levels of fear, that's typically when the fear subsides a bit. Right? Unless it divulges into a full-blown crash. And good news is Walmart beat earnings. Good news is Nvidia confirmed AI is alive and well. Good news is it does not look like we are headed into a recession. Catalysts that could have caused a major crash did not happen. The fact that the markets are saying the Fed's not going to cut rates in December, that is not a catalyst to give you a 20% decline on markets, right? The downside's pretty exhausted at this point. Even in the headline S&P, you're down about 5% from highs. NASDAQ, you're looking at a decline thus far of about 7.2%. The downside is washed out on good news, right? You have to get something that is actually bad to happen to get further downside. The Russell down about 8.5%. Yeah, this is a bottoming today. This is a bottoming today. Okay? Whether you like that or not. If you're short this market, if you got some puts on this market, I would think about closing those positions. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Check that link out down below in the description of today's episode. If you guys want to come join the trading community, highly recommend you do. It's a great place to be. And we're going to make a killing over the next decade or two, in my personal opinion. I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions, but come try it out. With that said, have a great rest of your day, and I will see you in the next one.